Welcome. Uh, Good morning, good evening, good afternoon from any part of the world which you are joining. Thank you for sparing time and thank you for joining our 15th webinar, free webinar. And this time it is an interesting topic, uh, financial markets and risk management. We have brought this webinar in collaboration with uh, Pakistani finance, banking and finance professionals in Kuwait, an institute, and a second institute is Financial Technology Services. So we'll start our session, but let's have a quick housekeeping rules before we start our session. So we will answer all your questions at the end of the session. So we will request all the participants to mute their mics throughout the session. And please note down your questions if you have. And there is another way where you can just write your questions in the comments and we will queue them and we will note them. And at the end of the session, we will try to answer those questions. Okay. So please keep your mics muted all the time. Thank you. Um, let's move forward. Let's have a quick introduction. So my name is Mohammad Kashif. I'm a senior member of Institute of Cost Management Accounts of Pakistan. I have over 17 to 18 years of experience in um, all type of departments which are linked to finance, including financial and corporate reporting, analysis, modeling, analytics and visualization is part of it. I'm also a founder and managing partner of Kaizen Analytics LLP, which works in emerging technologies like Power BI, R, Python, blockchain, IoTs, etc. So we work on both areas, on capacity building and on project implementation. So you work on both areas in regarding all the technologies which I've mentioned. So a little bit about myself, but this show belongs to some amazing professionals which we have lined up today. And thank you for them, for all those amazing professionals who have spared their time and done some amazing, collected some amazing information for our participants, starting from Mr. Shehzad, Mr. Saqib, Aftab, and Mr. Uh, Asad Khan. So I'll give a brief overview of them and they can also introduce themselves. So Mr. Shehzad is a seasoned professional chartered management accountant. He has some amazing work done in financial market analysis, credit risk analysis. He has done some courses as well. He has an exceptional skills on R and Python, apart from Excel. He is also an experienced trainer in ENY and UK International Institutes and also conducted many online webinars and online trainings. So this is quite a brief overview of Mr. Shehzad, and he can elaborate more on his abilities and his skills. So these are few of the things which I have discussed. Next, Mr. Saqib Aftab, a very seasoned professional, more than 27 years of experience. He is an assistant vice president in Kuwait Finance House, and it is a largest and pioneer Sharia compliant banks in Kuwait. He has some exceptional experience in Islamic debt capital and has an ability, exceptional ability for sukuk dealing. So we'll definitely he'll share his wisdom and we'll gain from his wisdom in just minutes ago. And then we are joined by Mr. Asad Khan. He's investment banker, risk management expert. He's a seasoned chartered accountant. He's done CFA, FRM, CBA, CQF, CISA, just few to his name. He has a MSc in risk management from New York University, and he has also a PhD in corporate finance. He is SVP in head of corporate risk management in Abu Dhabi Islamic Bank, has done amazing and exceptional work, has overall over 25 years of global experience, and he has also worked in different countries like Canada, USA, UK, France. So he will definitely enlighten us with his wisdom in just few minutes. So this was a few just a few overview of our amazing experts. As I explained earlier, a special thanks to Pakistani banking and financial professionals in Kuwait, an institute which is doing some exceptional work for financial and banking professionals in Kuwait and finance and technology services. A quick overview before I hand it over the session to Mr. Shahzad. I've done with now. The next working is by Mr. Shahzad. So Mr. Shahzad will walk us through with financial market and risk management. Then we'll request Mr. Saqib Aftab for a global market overview of global markets, international debt capital market, and risk management. Then Mr. Asad Khan will enlighten us with financial risk management, pricing, provisioning, and capital adequacy. And we will close our session with a Q&A and a closing marks by myself. And now I will hand it over the session to Mr. Shahzad. So Mr. Shahzad, you can share your screen.
Okay.
And I will request other participants to turn off their mics and turn off their videos as well.
Assalamu alaikum and good evening, everyone. And welcome to today's webinar of financial markets and risk management. So as Mr. Kashif explained very well and introduced me, so I'm just, I will take not much time by profession. Can you hear all of me? Okay. So I am a chartered management accountant and I have worked with a number of sector companies, including accounting firm and investment companies here in Kuwait. And presently I'm working with a subsidiary of Kuwait Petroleum Corporation for its mega refinery project. So let me start the webinar first. The agenda of the webinar is first the overview of financial system, and then introduction to financial markets, and we will see the functions and types of financial markets and what are the types of financial instruments. Then we will see what are the emerging trends and challenges nowadays in the global financial markets, and then global financial crisis and what are the impact of global financial crisis and the effect on regulations post crisis. Then the second area is the risk management, and we will see what are the financial risk measures, and then risk data analytics, what are the tools available for data analytics. And then finally, I will give an overview of the FMRM course, which we are going to launch. So first of all, what is the financial system? So financial system is an institutional framework existing in a country to enable financial transactions. And it comprises financial institutions such as banks, mutual funds, insurance companies, investment companies, then financial markets such as money market, capital market, forex market, futures market, then financial instruments or assets, deposits, loans, bonds, etc. And the financial system is that which execute the financial decisions of individuals, businesses, and governments. And it performs the essential economic function of channelizing funds from the savers or lenders who have the access funds to those who are the borrowers who need fund for capital projects for investment purposes. The financial system actually manages risk for the economy, and it performs as a regulator or the clearinghouse which facilitates transactions between the lender and the borrowers. So what is the mechanism through which the financial system works? Actually, it just connects or communicates between the lenders or net savers and the borrowers or net spenders or the investors. So they can connect through the direct finance, a mode of direct finance through the financial markets such as money market or capital market instruments, or they can connect through financial intermediaries through the indirect financing mode, such as the intermediaries are credit institutions, other monetary financial institutions, investment banks, other agents, etc. And just it's just connecting the two parties, the lenders or the net savers who have additional funds, extra funds, such as in individuals, farms, governments, non-residents, and the borrowers or the debtors who need funds for the capital or investment purpose, such as individuals, farms, governments, or non-residents. So this is whole mechanism is a financial system. Then what is a financial market? Financial market is a place where financial securities like stocks and bonds and commodities are exchanged at efficient market prices. The trading of stocks and bonds in the financial market can take directly between buyers and sellers or by medium of a stock exchange. Financial markets can be domestic or international. Then what are the functions of the financial market? The core functions of the financial market include channelizing savings or funds into real investment, pooling of savings such as mutual funds that pool the savings of a number of people or institutions, clearing and settlement of payments, and it works as a clearinghouse, managing risks and providing information. Then what are the categories of financial markets? Financial markets can be categorized in a number of ways, such as by nature of claim, debt market, equity market, by maturity of claim, like money market and capital market. So money market is that market which deals in short-term securities, and capital market which deals in long-term securities, mostly over 1 year. Then by timing of delivery, cash market or futures market, or by organizational structure such as exchange traded market or over-the-counter market. So there is a difference between exchange traded, which is instruments trade through exchange. Exchange traded are more transparent, more standardized transactions, and over-the-counter markets are between the two parties and not much transparent. Counterparty risk is more. So we will see in detail later in the course about all the financial markets and their instruments, their mechanism, their pricing or valuation techniques of these instruments. Money market comprises the short-term instruments market, and the capital market is for long terms, and it consists of equity market and long-term debt market such as bonds, debentures, and others, and equity market and ordinary shares, preference shares, like this. Then the financial sector comprises of a number of institutions such as retail banks, investment banks, insurance providers, investment managers, exchanges or clearing houses, government institutions, and payment processors. These all institutes comprises the financial sector in a country. And a number of financial instruments are there, and these instruments can be categorized as marketable or non-marketable. Marketable instruments can be traded in secondary markets, and where non-marketable instruments cannot. To recover their investments, holders of marketable securities can use investors in the secondary market. So we have primary market and we have secondary market. And primary markets are those markets where first time is securities are issued, and secondary market where already existing securities are traded. Then we have money market instruments such as commercial papers, certificate of deposits, repurchase agreements or repos, bankers' acceptances, and mutual funds. And in the coming course, we will see how to price the money market instruments. And definitely all of you might know about the pricing mechanism that we will see. If there are bonds, then we have to see how to price the bonds. We have different mechanism for pricing of money market instruments. So money market instruments, for example, the marketable are bankers' acceptances of bills, treasury bills, promissory notes, commercial paper, government bonds, and normal marketable are hire purchase and leasing contracts, mortgage advances, ODs, and all this. So capital market securities or long-term equity securities and debt securities. Equity securities are shares, ordinary shares and preference shares, and debt securities are consists of bonds, debentures, promissory notes. So, as I told you earlier, that in the upcoming course, we will see in detail that how to price the money market securities and how to do valuation or pricing of the long-term securities or bonds. As the normal mechanism is just to find out how to find out the bond value, just to see the future cash flows from the bond or security, and then take the present value of the future cash flows. In the case of bonds, we have uh, uh, coupons and the maturity redemption value at the end of the term. So we will see the discounted value of both these coupon payments and the redemption value, and we will calculate the bond value, and we will see in Excel also how to value or how to find the pricing of the bonds or securities. So then we have emerging trends and challenges in financial market nowadays in the global markets. As you know that due to the pandemic, the global markets have undergone major structural changes in the recent years, and the 5 key trends or forces that will be influencing the global economy in the future are digitalization, ESG consideration, that is environment, social, and governance, the political and economic stability, and the structural transformation due to the pandemic, and the effect on regulations of on all of these. The first factor or trend is the digitalization. As you might know that nowadays the term big data, AI, and advanced learning are having great impact on all the sectors, especially the banks and financial institutions. And they have to use data from social structure, actionable insights from data, analytics and rule-based automated decision making, artificial intelligence, machine learning and robotics technology, and IoT. Then we have digital and mobile experience. We have digital payments and expanding digital payment, digital sales, virtual and augmented reality, integrated digital experience. Then biometrics and adaptive security. And then we have blockchain technology, that is distributed ledger technology, digital records, faster and efficient processing, digital currencies, and all this. So the key trend or challenge nowadays is the digitalization. Then we have privacy and security issue, because nowadays due to the digitization and due to internet, a lot of threats are there, such as phishing attacks, then a number of spywares, malwares, and spiffing, snooping, and Trojan wars, logical bombs. A lot of internet threats are there. So the organizations nowadays should look forward and proactive in security and to de-risk the systems. And financial institutions specifically are keeping an eye on the evolving security landscape, and the landscape has changed now, and will be keeping the regulators will be keeping a tighter control on the financial institutions. Then after the privacy and security issue, we have ESG consideration, that is environment, social, and governance. And as per our research, 54% of millennial customers would consider switching to primary banks based on environmental, social, and governance factors. And they can also explore services that contribute to broader sustainability and such as green effects and all this. Then the fourth one is the political and economic effect. As nowadays, due to the pandemic, all over the world, the global markets are very volatile, and due to the effect of most of the emerging markets are affected by the stagflation, that is a simultaneous increase in the rate of inflation and the rate of unemployment. And severe markets are affected by the hyperinflationary conditions. So these all increase due to the new actors which influence impacts on the global trade, including supply chains and other networks. The increasing number of large global corporations are also likely to have new challenges for policy makings, and such as taxation, regulatory, and provision of services and markets. Then we have structural transformation, and there have been significant structural transformation in the global financial markets nowadays since the pandemic. And the pandemic has been a catalyst for the structural transformation. due to the technological change, automation, and supply chain reallocation. And this has resulted in change in operating business models specifically for banks and other financial institutions. And it is presenting important challenges as well as opportunities. Then we will see global financial crisis and what are the main causes of these financial crises. So the foremost cause of the financial crisis of 2008 to 9 was the excessive risk taking by the financial firms under implicit government guarantees. Because why this credit crunch came? Because of oversupply and over credit due to the lenient policies and not much regulations or lenient regulations. The crisis started from the US housing market when they have given the loans to the subprime loans or mortgages and to those people who were not have good credit history. So due to that, it affected and the bubble has burst and it resulted in a credit crunch. And due to the contagion effect, it affected the market, overall market globally. And this was the one of the most foremost reason of excessive risk taking by the financial firms. Due to that credit crisis started. And second was the regulatory focus on individual firms rather than the systemic risk that was an inherent risk in the financial markets. The focus was on the individual firms. And third is was the lack of transparency of financial firms, products, and markets. Then last, proliferation of shadow banking or non-bank financial intermediation system, that is NBFCs, SIVs, structured investment vehicles, and money market mutual funds, etc. So these are some of the reasons of global financial crisis, and there are a number of financial disasters which have been taken place in the history, like the major financial bankruptcy was in 2001. That was a case of Enron, which was a very famous US energy company, and which has been bankrupt due to the number of reasons, like window dressing and not taking care of the showing proper systems for books of accounts, and they have hide their liabilities off balance sheet items, and all this which has resulted in the bankruptcy, one of the largest bankruptcy. And do you know what happened? Their accounting firm Arthur Anderson also finally charged, and all these consequences due to these lenient rules and regulations. Then we have in US another largest investment bank, Lehman Brothers, which has been filed bankruptcy and filed this due to that. And in UK, Northern Rock, one of the largest investment firm, which has been bankrupt. So these are some of the global financial disasters. And then we will see what are the post-crisis effect on regulations. Like after the crisis, what the regulatory agencies have taken the steps. So one of the international regulatory agency, that is the BCBS, that is the Basel Committee on Banking Supervision, what they have done, they have a series of Basel Accords, like in Basel 1, which has been implemented 2004 and which has only minimum capital requirements for credit and market risk. Then Basel 2 came and it has 3 pillars. In pillar 1, minimum capital requirements, and pillar 2, supervisory review process, and in pillar 3, disclosure and market discipline. Then what happened in Basel 3, the same 3 pillars are there, but only there is an enhanced version of all the pillars. And this has came after the financial crisis of 2009 to 10. In 2010, it was proposed. And then what Basel 3 has done, in pillar 1, there were enhanced minimum capital requirements. Then in pillar 2, enhanced supervisory review process for farm-wide risk management and capital planning. And then in pillar 3, enhanced risk disclosure and market discipline. So that was the effect of the crisis, and then a series of international regulations have been implemented on the banking and financial sector. Besides the national laws and regulations. Then the last area, which is the second module of our course, is financial risk management. And risk can be defined in a number of ways. Uh, the basic thing is that the risk is a chance that an outcome or investment's actual gain will differ from an expected outcome. So the downside is the risk and upside is opportunity. And by the A and Z standard, risk can be defined as the chance of something happening that will impact the objectives. So we have a number of types of financial risk, such as operational risk, market risk, liquidity risk, credit risk, currency, and interest rate risk. And in order to understand risk, you should know what is the basic operating business model of bank. The bank has to take the money or funds and then lend the money. So these twin functions both results in the risk to the bank, either lending and receiving. Borrowers, the first risk is that the borrowers might fail to pay back the loan. That is the default risk. And the second is bank may fail to provide cash to depositor on time. That is the liquidity risk, and through which the liquidity crisis is started. So then we have operational risk, which is the components of operational risk are people, processes, business practice, systems, and external events. So these are some of the reasons, and there are 7 operational risks projected by Basel II, that internal fraud, external fraud, and the systems and damage to physical assets and clients and execution, delivery, and process management. These are the components of the operational risk. Then we have credit risk, and credit is just a risk that the borrower will not pay back. So the Basel Committee on Banking Supervision, BCBS, has defined credit risk as the potential that a bank borrower will fail to meet its obligations in accordance with the agreed term. So the credit risk has a number of drivers like PD, LGD, and EAD. That is, PD is the probability of default. That what is the percentage of default, and then loss given default. LGD is the what will be the amount of loss if there is a default, and then exposure at default is the outstanding amount at the time of the default. So we will see credit risk in detail in the course, and how to and banks are mostly concerned with how to calculate the expected loss and unexpected loss, and these are the components of expected loss. As per the equation, EL is equal to expected loss is equal to PD into LGD into EAD. So we'll see in detail. Then we have another area of risk data analytics. What are the data analytics tools to quantify the risk? And risk analytics is a set of techniques that measures, quantifies, and predict risk. And analytics provides banks with more insight and help in taking decisions. And functional areas such as compliance, fraud, NPA, non-performing assets monitoring, and calculating value at risk can benefit greatly analytics to ensure optimal performance. Then we can use data analytics to identify the exposure of loss, to minimize the default of risk, and uh, like if any bank or any investment firm which is lending loans to the customers, they have to use EDA, that is exploratory data analysis, to analyze the patterns present in the data, or to analyze the customers trend and patterns. This will ensure that the applicant will pay back the loan and are not rejected. Then risk reporting, we have to use we need to use data analytics tools such as Power BI, Tableau, and these tools help us to report the risk. We will see in the later slides how to use these tools. Then we have risk models using analytics like market and liquidity risk models such as value at risk VAR, ALM, asset liability management, and liquidity risk, expected shortfall. Then credit and counterparty risk models such as PD, LGD, and EAD, risk rating models, exposure, and CVA. Then operational risk models, loss distribution, approach model, integration model. And then we have anti-money laundering and anti-fraud. Then there are certain financial risk measures such as value at risk and expected shortfall. And this is the screenshot of R Studio. And in our previous data science for finance batch, we have used R for computing the value at risk. And in this course, we are not going to use R or Power BI, but I am just showing you some of the tools used for risk data analytics. In this course, we will use Excel as a tool for bond valuation and all this. So VAR, we will cover definitely in the course, and it's a maximum potential loss which can occur to a portfolio of a certain investors, let's say 99%. So if the confidence interval is 99%, it means we are sure that, let's say, during the next 30 days, the bank will not incur losses more than 1 million. So this is a 99% probability or chance. It means there is a 1% chance that the loss will exceed by 1 million. So, but if the loss will exceed by 1 million, what will be the amount of the loss? Here, the limitation of VAR. VAR does not tell us what level of loss beyond the VAR level. So here, expected shortfall comes in play. So we will see how these can be calculated, and there are a number of methods to calculate VAR, like simulation method and mean variance method, and a lot. So we will see this in detail in the upcoming course. Then, for demonstration purpose, we can prepare an operational risk management KPI dashboard in Power BI, and like here we can use risk by type, and this is a risk heat map which is showing the likelihood and impact or consequences analysis or metrics. So this is a very helpful tool, Power BI, for risk management dashboards. Then this credit risk reporting dashboard is prepared in Tableau, and it is just to demonstrate you that how we can use Power BI and Tableau for credit risk reporting. Then in this course, we will use Excel tool to find out the bond valuations, or there are a number of methods or approaches that as I explained earlier, that we can use a discounted cash flow method of calculating the bond price or bond valuation. We can discount the future amounts, let's say coupon payments and the redemption value at the end of the maturity. And that value is the bond price or value. Secondly, we can use a bond pricing formula or Excel price function. So a lot of things will be there in the course, which will cover Excel as an advanced tool for bonds or securities valuation, both money market securities and long-term securities. And we will see how to calculate the bonds duration and convexity, and portfolio, how to calculate the mean, standard deviation, how to calculate the mean and standard deviation variance of a portfolio, etc. So and then we will see the yield to maturity YTM or the price yield curve, and how to calculate the YTM. It's just YTM is just an IRR of the bond. And we will have a IRR formula also in Excel. So we'll see a number of options and how we can calculate this YTM or IRR. Then this, I will just give you an overview of the upcoming course of on financial markets and risk management, and it will have two sections. The first part covers the financial markets, and the second part covers the risk management. In the first part, we will have 4 or 5 sessions on financial markets. So in first session, I'll cover financial engineering or basic financial mathematics concept such as DCF, time value of money, simple and compound interest. And then in second session, introduction to financial markets, financial instruments, banking and global financial crisis. Then third session, fixed income securities and valuation, like bond yield and return calculation in Excel. Then fourth session, just an introduction to derivative securities and hedging concepts. And then fifth session, equity securities and valuation. And here we'll see return and equity valuation in Excel, and how to value the how to do equity valuation and CAPM and dividend valuation model, and all this we'll see. Then the second section will be risk management. Here the first session will be introduction to risk management, the risk and return trade-off, the SD variance formulas in Excel. Then financial risk measures, some of the performance valuation ratios such as Sharpe and Trainer ratios, then value at risk and expected shortfall. Then we'll see how what are the options available to calculate these. Then in the last session, we will do credit risk modelings, credit risk types, what are the components of credit risk, and expected and unexpected loss, and all this. So I think I have given an overview of all these challenges and about our upcoming course. So now Over to Mr. Kashif for further proceedings.
Thank you, Mr. Shazad, for this amazing overview. Can you unshare your screen,
Yeah, sure.
please? So it's thanks a lot. Let me.
Okay.
Yes, please. Then I will request Mr. Sakib to please share. Okay, great. Let me share my screen first, and let me request Mr. Sakib Saab to
Ji,
please.
sure.
Sir,
Thank
it's up
you.
to you, please.
Okay, thank you very much. Good evening, good morning, as Brother Kashif said, whichever time zone you are. My name, I think there was a brief introduction. My name is again for those joining a bit late in the session. My name is Mohammed Saqib Aftab. I work for Kuwait Finance House Group, KFH. For people who may not know, it's one of the largest Sharia compliant bank globally. And I work at the investment banking arm, which is KFH Capital, as AVP Investment Banking. Primarily, what I do professionally is we arrange debt via what we call Islamic bond, or it's called Sukuk, and that basically is for sovereigns, GREs, government-related entities. We have for banks and some select corporates. So today, basically, what we are going to cover is, a very brief overview of the global state of the global markets, and then I'll just briefly touch upon, the Islamic bond or Sukuk, and how it has evolved, and a brief in terms of the structures and the tenors. If there's one word, going to our economic overview, if there's one word that would define today's global markets, that word is uncertainty. I've been into this, into the debt capital market space, Islamic debt capital market space, last 15 years. I've never found it as difficult to price any security or any upcoming issuance as I have today. So uncertainty is really what defines today's global markets. We have to remember that we are coming out of one of the greatest challenges we in our lifetime have faced, and that is the pandemic. When we started 2022, most of the clients we used to speak, we used to say, we have some headwinds that we may see during the course of 2022, and those could be in the shape of ongoing pandemic. We still had some lockdowns around some parts of the world start of the year. And then we had the supply bottlenecks still there, very much affecting the overall economic recovery. So over the period, and also we had by the end of 2021, we had an indication in terms of what to expect in terms of the interest rate. And it was very clear that an interest rate high cycle would begin in 2022. Come 2020 Q1 end, and we had an additional element, and that was a major element where we find ourselves today, was the war in Ukraine. And the war in Ukraine basically added up to the inflationary pressures by pushing the energy costs much higher, and also some of the essential commodities, those prices went up. So what we started the year is just thinking about some headwinds. We had some added risk added to that during the course of the year. And most of the market, what people had concerns was on inflation. Now, those inflation concerns started to move into concerns on recession as we gradually move on now.
Sakib, can you unmute?
Sorry, was I
Yes,
not audible?
please. Yes, please. Just few minutes, just for a few minutes.
Okay, so maybe I'll start. Was I talking about maybe the interest rate hike cycle, and how we saw the during the course of the year, very excessive interest rate hikes, aggressive interest rate hikes coming across all major markets, basically the US, the UK, the European Union. Next week, we have the Fed meeting, and again, post what we have seen recently, there is a chance of another 75 basis point to 1% rate hike. So one thing is very clear in terms of the global markets, that this market will never be, we will never be able to ascertain the direction of the market, and the volatility will continue. And I think today's topic, I think, is very important from that perspective. That yes, how to manage risk in the financial markets. Markets are going to remain choppy as we go. Some of the slides, maybe I can just walk you through just to show you what we have gone through. So the next slide. So basically, what we are showing here is different, zones. As you can see in 2020, we all saw a major dip. This is the height of the pandemic, where the pandemic started, and we had, economic stagnation, which is quite evident across all the markets, with Eurozone in a way being deepest hit. And again, if we go to the next slide, one second. Now this one, the difference between the first slide and the second slide is I've just grouped them into emerging market, developed markets, and world. And here, what you may see is that Latin America had the deepest dive, and then we see a strong resurgence back in 2021. It's pretty common. You have a very steep fall, then you have a sharper rise. But as you see the forecast across, now that's the important part. What we are seeing is a global average growth of about 3%, and this is. This always, across during the course of the year, this has been cut down, I think at least 2 or 3 times. And I still assume probably there may be further downside to this growth projections. And I will also take you to the next slide, where we'll just to give you a sense in terms of, this is the US 30 average fixed mortgage rates. And over the course of the year now, we started something like, maybe a 3%. Last year, start of the year was like 2%. And now we're more into a 6% handle. Now, this is a very important gauge in terms of, to expect how inflation is going to affect us in terms of the real estate market. US markets really has a major impact as these rates rise. The demand diminishes and we have an impact. So overall, it's not a very rosy scene. It's a very challenging outlook as we go forward. Maybe another slide, and I will just show you. This is one of the reasons. Where we sit as GCC, we are a beneficiary of the increase in the oil prices. But if you look at this chart now across 2026, we see elevated levels of oil prices. That's the expectation. This can change, but this is what we have at the moment, the current forecast. So next year, we were seeing pretty high oil prices. So the key reason or causing this volatility today is inflation. With these energy prices being high over the coming year, we still should expect these inflationary pressures to continue. And the central banks have a central role, and that central role is to control inflation. So I think the central bank will remain a bit aggressive till they can really tame this inflationary pressure. So this, in a sense, on the global market. I'll just briefly touch base on the Islamic debt capital market. With regards to Sukuk, as I said, some of them referred to as Islamic bonds. The Sukuk universe is quite big now. 2014 was significant when we saw non-traditional players, because Sukuk market is concentrated mostly in GCC and the Islamic markets. So we have the GCC countries, we had Malaysia, Indonesia, Turkey as regular issuers. But 2014, we saw South Africa, UK, and Hong Kong. And we were part of those debut issuances. So we were engaged with the South African government. So that was a very good addition. So Sukuk being accepted outside the traditional market was an important element in the growth of Sukuk. And outstanding Sukuk today may be in the region of about 400 billion plus. So when we started, this product 15 years back, very few players were getting into this space now, and the tenors were mostly restricted to 5 years, some benchmark 500 million sort of sizes. Now we have already seen a corporate issuance out of Saudi Aramco doing a $6 billion issuance. The demand on that was $60 billion. Similarly, we had 9 billion issuance from the Kingdom of Saudi Arabia. These sizes were not, we couldn't think about such sizes doing, let's say 10, 12 years back, but now it's a very developed market. We had from tenors now 7, 10, 15, 30, we have seen issuances across all these tenors. Similarly, there are many structures now which are widely accepted by the Sukuk investor base globally, and there are certain standards that are now pretty much known to non-traditional markets as well. Coming to investor base, the Sukuk investor base is Islamic as well as non-Islamic. So Sukuk generally tends to trade better than the bonds, and in a market like this, the downside is more limited given the nature of the holding pattern of the investors. In terms of, again, the types of issuances, senior and secured, mostly these are all unsecured obligations. We have seen perpetual, subordinated. Of late, last 2-3 years, we have seen the emergence of a growing number of issuers tapping into the ESG market, which is the environmental, social goals, which we call the green sukuk. In terms of currencies, predominantly it is a dollar market. The investor base is predominantly US dollar investor base, but there is a very large domestic markets in Malaysia, for example, huge market, very developed, very good secondary markets out there. We also have, I would say in Saudi, we have seen very large domestic issuances. So there are certain pockets where there is a very strong domestic market. And over the years, we also have a very strong now secondary market, which is essential for any market to develop. Now, coming again, linking it to where we were in terms of the market environment, as like any other asset class, Sukuk and fixed income has gone through a major repricing this year. And US investment grade bonds on an average had a downside of double digit, many emerging bonds, Sukuk, they traded at deep discount as low as 70. I still recall about a month back, we had the Pakistani bond trading around 52, 56. So you can imagine the repricing that we have gone through. In Pakistan cases was maybe some local reasons, but overall Egypt was 68%. I mean, there were so many other cases I can show you where they were trading at deep discount. So this is what the nature of the market is. This tells you how difficult this market is today. Most funds, Sukuk funds, on an average, I think trading around 5% down. So a negative 5% return year to date on the Sukuk funds. As I mentioned, you still have a rate hike cycle which is ongoing. So, and it's not over yet. We have different numbers coming from different analysts, but one thing is for sure that there is more rate hikes coming across. So just to conclude, as we go into 2023, market is going to stay very volatile and choppy. And I think probably the offering over here being shown is something, it's an essential skill as you go into these markets to know and learn, how to mitigate those risks and how to manage those financial risks. So this is all I had, and I'd like to conclude my segment. I'll maybe just walk you through another slide just to show a bit of distribution on the Sukuk before I conclude. This is again a chart, global bonds. You can see US is the largest issuer of those bonds. And if I put a number, this is almost 500 billion. If I may correct myself, this would be 500. Yeah, 500 billion of issuances. Then you have supranationals, you have the developed markets, and then by segment, financials is the largest segment in terms of the issuance. If we go to the Islamic debt capital markets, okay, as you may see, the next slide we have Saudi Arabia. I mean, again, the biggest issuer. Government's almost half of the issuances, as you can see from what we have. The second biggest contributor being the financial institution, which are mostly banks, regional banks that issue quite regularly in these markets. And maybe the GCC Sukuk. And if we go to the next slide, this is the overall US dollar international Sukuk issuance. And here you can see, Indonesia, they did a 2.5 billion issuance this year. Very difficult markets, but was a good issuance. But they had to pay up quite a bit. And then you have the other markets. You can see again the government taking the load because in any volatile market, sovereigns have to take lead to open up that market. And this graph over here, pie chart, clearly shows that most of the issuances have been by the government's sovereigns. Last slide, just to show you, give you a reflection in terms of how the volume has been in terms of the Sukuk issuance. You can see on an average, like we have been $25 to $30 billion. But look at 2022, end of Q3, and we are still around $13 billion. This is again evident. The market has been shut for a couple of weeks. Issues. There is a huge pipeline of issues, but again, it's not the market. It's not an easy market to come in and to get the right pricing and the size that you need. So this, in a nutshell, the overall Sukuk environment. I'd like to conclude my segment. Thank you very much, and obviously, any question answers we can take at the end of the session. Thank you very much.
Thank you, Saqib Saab. Thank you for this amazing overview of Sukuk and international market. Thanks a lot. And now I will request Mr. Asad to please unmute, and if you would like to share your screen, I unshared my screen. So you can share your screen.
Hello.
Yes, I can hear you. We can hear you.
Okay, so this is Asad, guys. I'm not sure if you can see the screen, or Kashif, are you going to show the screen, or I'm?
It's up to you. It's up to you. I can show the screen as well.
Yeah, please. If you can show, that is fine.
Okay, no problem. So, okay, so I think.
Yeah.
Okay. Yes.
Okay. So my name is Asad Zaman Khan, and I'm a chartered accountant originally, and then I've done a lot of other educational things in risk, audit, and finance. And I've been working around the world last 25 years. Did my CA from KPMG in Pakistan a long time ago, and then I did CFA and FRM and CQF and CISA and all these certifications. I also did an MSc in risk management from New York University in New York, and did a corporate finance advanced program in London Business School. Beside that, I worked in many countries. Started in Pakistan with my CA articleship, and then Ernst & Young in Saudi Arabia and Middle East, and worked with NCB, the financial controller for Islamic corporate banking, and then I moved to investment banking actually, and then I used to work in the front office, and then did a lot of IPOs and right issues. That was old good investment days before the 2008 financial crisis. Um, and then moved briefly to Qatar for 2 years, and then to Canada for like 10 years. And currently I'm with Abu Dhabi Islamic Bank for last 3 years. So I have worked in different capacities, mostly in the banking, as an external auditor, as a financial controller, as an investment banker, internal audit in banks, and then as a in the system implementations, now working in the risk management, enterprise risk basically, and in the portfolio management. So I know the banking inside out. So rather going into the technical things, I thought that maybe I will because I believe that most of the participants are young, and they would like to know the path towards the success. So Kashif, can you move to the So this is my view. I call it the practitioner's perspective on career success. If you're young, you are in Pakistan, or even in the Middle East. I would assume that most of you are in Pakistan. Some of you may be in Middle East, and you all want to grow in your professional career, and then go up, make more money. So I was thinking today, I wrote these 2 slides, and then I was thinking what I can tell you, how you can grow. So the first thing is definitely hard work. You have to work hard. There is no free money, as they say in US. There is no free money. So you have to work hard. But work hard is not probably enough. You have to solve the problem. In any capacity you work, if you work in as an analyst, you work as like a junior level, or you work in the middle management, or you work at the senior level, definitely at every level you have to solve the problem. A lot of people ask me this question, and because I have been to, like, in Pakistan also, and then in Middle East, and even in Canada, where I live. So a lot of people ask me this question: how can we do this, and how can we grow, and then how can we achieve this and that? At the end of the day, nobody is going to pay you unless you show something, and which is basically how can you solve certain problem, whether you are in a back office like accounting, finance, or audit, operations, they all are back office, or you are in a front office where you are like facing the customer and selling something, or have a front office role. You have to solve the problem, whatever it is. If you cannot solve the problem, then you have no value. Nobody's going to pay you. And for all these things, you have to develop certain kind of skills. You need to have a skill development plan in your mind that if you will do this, it's going to happen. If you don't do this, nothing going to happen. So there's no shortcut. This is the bottom line. There's no shortcut. You have to work hard, bring some kind of problem solving attitude, and you should have a certain skill set. A lot of people, especially in Pakistanis, they lack in skill development. They don't like it, but that's the truth. In the world, we have a shortage of skilled workers. If you are in US, you are in Canada, there's really they are short of skilled people. The question is how you reach to the point that where you can fill that gap. If you have a certain good skills, there are jobs around the world. So the question is what kind of skill development you can do. And these are the 4 key skills I wrote today, which are in demand in a competitive market. The first thing is whichever like profession you are, whichever industry you are. For example, you are in a banking or financial services industry, or in a non-financial, for example, you're in manufacturing, you are in airline, you are in services industry, you need to understand the business of your company. Most of people, they don't understand their own business. You need to understand the product. Once you understand your business, once you understand your product, then you have to understand how you price the product. If you are in banking, then what is the way to provide for provisioning, and then how you ensure the adequate capital. So it's all linked with your knowledge of business. The second thing is there are key must know concepts. We call it in quantitative finance or business maths. Basically, you need to understand the calculations. If somebody asks you to price, then you need to know that. If somebody's used the word RAROC, you need to understand that how to calculate the risk adjusted return on capital. You need to understand how you price your product, how you will provide, how will you calculate the capital, how you're going to calculate the regulatory capital, how you're going to calculate the economic capital. You need to know the maths. So if you are not good in maths, then you probably go to another area. In finance, you have to be very good in maths. Finance, business maths, or quantitative finance, we call it. And the calculations is the one part, and then the application is actually the most important part. You need to understand that how you apply. When you say that you know the certain calculation, but you need to understand that how you apply, what's the application of these calculations in the real life. The third thing, which is now very important, is your command on technology. Nowadays, there are a lot of tools, basically coding, for example. This brings efficiency. And look, if you are in developed countries, again, like you are in Western Europe, or you are in North America, you are in US, or you are in Canada, and you like I meet like a lot of chartered accountants who are or ACCA, for example. They are going to Canada, and they ask this question: how can they get good job? How quickly they can get a good job? And my suggestion always is that it depends on how good you are in certain tools, and especially coding. But Excel is the starting point. Probably 80%. If you are good in advanced Excel, then you can have a good start anywhere. Here in the Middle East also, like I work in UAE, I worked earlier in Saudi Arabia, I worked in Qatar. I used to cover the whole Middle East, North Africa, MENA region. You need all these tools for efficiency purposes. So Excel is excellent, but you need to be like extremely good in Excel, especially with the big data. Then R and Python and SAS, we don't find people. Like I want people, like banks use SAS. I have worked on SAS. Like I'm not a coder, but I like model development teams work under me. I want good model developers who can build good risk-based models in SAS. I don't find it, at least not in Pakistan, in Karachi or other big cities. Then soft skills. People don't understand the importance of soft skills. Communication and presentation, including English. If you go outside Pakistan, even in Pakistan, I think, if you go any top organizations in big banks, if you cannot speak, if you cannot write, you cannot present yourself, you have no future. So soft skills are very important. That how you speak, your body language, your command, and your presentation. And you like it, you don't like it. English is the key. You need to speak good English. In Pakistan, forget about Middle East and other countries. So these are there's no way. Like I tell you, like in Canada, for example, if you go to a bank, if you're not a CFA, I mean, unless you are probably a chartered accountant or other accounting background, maybe you will have a job in accounting department. But otherwise, in most of the banking, you need CFA. And I give you just a small idea about uh, uh, and I'm not just because I'm CFA, so I'm promoting CFA. I'm just telling you the importance of education. So Toronto is the largest CFA society in the world. And we are in Toronto. We are a neighbor of New York City, but we have more CFAs than New York. Although Toronto's economy is not comparable to New York economy in absolute terms, in per capita, both. Toronto is the largest CFA. It's just a small population. So when you go to work in a bank, every second person I met is like 2-3 good qualification. Same thing I can notice here in UAE. For example, in Dubai, even in Saudi Arabia, like Riyadh is growing, Jeddah, or mainly Riyadh now. The demand for CFAs I'm talking about banking is humongous. So these 4 key items are very important if you want to grow, and it's a lifetime kind of thing. It's a habit basically, because you cannot have all these things in when you're 25 years old. You have to keep focusing on all those the requirements for your career development, your professional development. It may take 10-15 years to achieve. So you have to learn how you study and how you build your gaps in your skill set while you're working, while you have a family, while you have a kids, and then so it's a part of your life. So this is like a kind of a soft requirements from my side. The next slide, Kashif, you can move to the next slide. Yeah, so these are the regulatory horizon. This is very important also. So earlier I talked about in the previous slide, I said that you have to have maths and English and education and all these things on tools and Excel and coding kind of things. But this is the application. This is the kind of a very brief, basic summary of a regulatory horizon. Anywhere you're working, if you're working in a, for example, not in a bank, if you're working in a pharmaceutical company, you have to ask that what are the local regulations you have to comply. For example, for banks, again, company laws are there. You need to understand the company laws and contract laws. Then central bank regulations are there on everything. Probably in a bank, you will find like many regulations which local central bank issues. You need to understand those regulations. Then on the accounting side, there are like a lot of accounting standards. Some of them are applicable in Pakistan, some of them are not, which are applicable outside the world, like IFRS 9. If you are in a bank and you're on the credit risk, the whole credit risk actually situation changed dramatically. I'm working, as I said that earlier, that I'm working in the banking industry all my life, all my professional life. I remember we used to audit the branches of large banks like Habib Bank and allied banks, and we used to they used to follow the World Bank's prudential regulations for the credit risk, and then later on, which were very judgmental and then basic. Then later on, IS 39 came, which was an accounting standard, and the whole thing changed and it became from more subjective to more objective and then the calculation driven. And nowadays, IFRS 9 is there, and which is very forward looking, and then all the risk models are basically based on IFRS 9 credit risk models. Similarly, on the market risk side, there are many market risk models which are VAR based, and then operational risk models are also, which are not that complicated, but mainly credit risk models which are IFRS 9 driven, and then you have the market risk models which are VAR related. And then the international regulations, which are Basel regulation. Basel is the mother of all the banks. So around the world, you use Basel, and then the regulatory capital actually is calculated based on the Basel regulation. And there is a lot of requirement on the credit risk, market risk, operational risk, now climate risk. So you need to understand all those risks, because you cannot, if you're on the modeling side, you cannot model it unless you understand the regulation. And because the models are based on these regulations and these accounting standards. So those who come with an accounting background, definitely they are in a much better position to understand those regulations. But if you're not, and then you are coming from another background, but you're still in the banking, you want to you're coming from a engineering background, and you want to work on the models side, then still you need to understand these regulations. So the point is that your academic education, your professional education is one thing, and the knowledge of these regulations are very important for your professional development. You will not find books in your courses covering these standards and these requirements. You have to spend your own personal time and read maybe some other books outside your academic scope, or work somewhere, and then have these the practical experience. So with reference to this particular seminar and this particular course which they are offering, I would say that if you go and then learn the maths, if you go and then learn the modeling, at least even the basic one even in the Excel, that how you calculate different types of risks, or how you use the Excel for different kind of areas in a financial organization, that will be a good starting point for your professional development and your career development. So this is from my side, and back to Kashif. I hope that
yes,
useful.
Thank you, Shurasab, and truly some amazing words of wisdom by a seasoned professional. Thanks a lot for this amazing advice, and I'm pretty sure that this advice will go along with all the participants. Thank you, Shurasab. So now let me come back to the slide which we are having. So let me first just give an overview. Overview has already been given by Mr. Shehzad. Now I'll just show a slide of the outline of our paid course. So it will be it will be paid course which will be a live session will be conducted over there. So Friday and Saturday will be a live session. It will start on so we have time. It will start on 21st of October, and it will be a 1-month course, Saturday and Sunday. And the live classes are right now they are planned to be held at 9 p.m. to 11 p.m. Pakistan time. So if this suits you as per requirements, so you can always WhatsApp us or email us, and we can give you all the details of this course. Now it's time for a Q&A session at the end of the session. So I will request the participants to raise your hand first, and then I will request them and you can ask your questions. So you can raise your hand, and then I will request you to ask questions. Okay. So MD Arif Rahman. So please unmute yourself and please ask your question.
Thank you, Mr. Kashif. I'm Arif Rahman from Bangladesh. Thanks for attending me here at the famous webinar, Financial Market Risk Management. Can we get the all slide to my mail ID?
Yes, sure. Why not? You just give your email ID in the chat, and I will email to you all the slides.
Okay, thank you, Mr. Qasim. Hopeful see you later.
Sure, you're more than welcome. Thank you. You can lower your hand, and now I will request, there is a name MF Ali. So can you ask your question?
Assalamu alaikum, sir. Ali here. Nice session. Sir, I have two questions. Kindly elaborate about the course. Please, can you share the course outline with us and the charges and fee about the courses? And secondly, that if somebody not taking, unable to take online classes, so can you provide the recorded lecture for the references?
Sure. As far as the course outline and details are concerned, they will be shared to all the participants by Monday. So, and it will have all the informations, including the details, the modules, the pricing, and all those things. So you can give your email ID, and we can share this outline to you. And as far as recording is concerned, in our all sessions, paid sessions, if you register in our course, so whether if you miss any class, we supply and provide the recording of all the sessions to all the participants. So whether you have joined one class or you haven't been able to join any class, you will get the recordings. Okay, so thank you for your question. Now I'll request if any other participants have any other question regarding the word of wisdom which is shared by all of our three experts. So if okay, no issue at all. You can always reach us, and you can always reach us at various platforms. You can reach us at LinkedIn, at Yahoo, YouTube, Facebook, and we are always welcome to answer your question. You can also contact us through email, to WhatsApp. So we are always welcome all the questions, and we'll definitely answer your questions. So any final words by Mr. Shahzad, Mr. Saqib, and Mr. Asad? Over to Mr. Shahzad.
Hi, thank you, Mr. Kashif, for your support. And I hope this session has clarified the ideas about the course and the course outline and the topics to be covered, and the industry experience shared by our experts, Mr. Saqib Aftab and Mr. Asad Khan. I hope the participants got idea from them, their experiences. So I would just like to thank everyone, and from my side also, and from Kaizen and from FTS, that to spare your time and to give us an opportunity. And inshallah, we'll continue finding some good courses and do our research and provide you quality education. Thank you very much from my side.
Now I'll request Mr. Saqib for any closing remarks before we call it a day, and then I'll request Mr. Asasa.
Sure, thank you very much. All I need to say is really thank you very much for this opportunity. Obviously, I mean, our area, the topic I can speak for hours on that. It's such a big topic. The whole idea was just to give a quick sense on the markets and the trends in the markets and the challenges we have. So I think hopefully the participants, they would benefit from what they have heard. Thank you again for the opportunity.
Thank you, Mr. Saqib Aftab. And now I'll request Mr. Asad, please.
Thank you very much. It was a good opportunity to share my thoughts. And if any of the participants have any question or anything, feel free to send me a message, and I will try to reply. And it looks like a good course. And then good luck, all of you.
Thank you. And thank you, participants, for sparing time, your valuable time, and joining us in our live session. The recording will be on our YouTube channel. So the YouTube channel link is given, and it will be shared by tomorrow afternoon. Thank you. Best of luck, and see you next time. Thank you.
Thank you.
Thank you.